Welcome back to another edition of the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. Another indication of cannabis legitimacy is the requirement, necessity, if you will, for marijuana business accounting. So here's some best practices from Marijuana Venture Magazine on accounting, tracking, and point of sale software. So if your cannabis business is already generating sales, you're likely using an accounting system geared towards a smaller business such as Quickbooks. So this article is going to assume that you're currently using or plan to use Quickbooks as your cannabis business accounting system. So the topics covered are generally applicable to other accounting systems. So here's pro tip number one is utilize Quickbooks as the general ledger only for sales, cost of sales, and inventory. An important accounting concept to understand is the difference between the general ledger and subledger. Think of the general ledger as a subtotal of the details in the subledger. So for example, you have 6 different products in your dispensary. The subledger will contain a complete list of all 6 products and the quantity cost of each. At the bottom of the subledger, there's a grand total of the cost of all of the inventory in the dispensary or cultivation facility, whatever you have. And it's only the grand total that's shown in this general ledger. So due to the fact that you're likely using a separate product tracking system, don't attempt to recreate the sub-general ledger of sales, or cost of sales and inventory in Quickbooks. The system discussed here is inadequate to track these details for you. However, that being said, use Quickbooks as the sub-ledger detail for accounts payable and all cash transactions. In other words, it's a best practice to enter all vendor invoices into Quickbooks upon receipt, regardless of whether the invoice paid in cash, check, or credit card. This practice allows you, as the owner, to know the outstanding bills payable at any time. In addition, it's vital that all receipts and use of cash are recorded in the cash ledger within Quickbooks. Pro tip number 2 is utilize QuickBook class functionality within a single Quickbooks file and use separate QuickBook files for each legal entry. So there's likely multiple entries, each with multiple locations and or departments involved in your dispensary operations, such as the state licensing entities, management or staffing companies, real estate entities, etc. So each legal entity plays an important role in the operations reporting of compliance of your dispensary, and therefore a complete accounting record of each is required. So your tax prepper and auditor will ask you for these records each year, and if you don't complete, or if it's not accurate, you'll incur higher professional fees for the correction or if they have to create them. So first, create a separate class for each physical location, whether your dispensary or cultivation license, within the Quickbooks file of each licensed cannabis entity. You may even have subclasses within this dispensary or cultivation class representing each different department within these locations. Apply this practice to the other legal entity Quickbooks files. At any level, you may want to allocate and capture costs. Your accounting system likely has a variety of standards reporting by class or department that'll be helpful in analyzing which locations or departments are profitable. However, remember that this tip is only as good as the practice behind it. Therefore, every transaction entered into the accounting system should be classified accordingly. QuickBooks includes helpful standards reports you can run at any time to check the diligence of your accounting team. Periodically ask your staff accountant for the balance sheet by class and profit by loss of class. Look for any balances in the unclassified column. If your accounting team is following this tip, there will be no unclassified columns in the reports. If there are, remind your team that every transaction needs to be classified properly. Next, ensure that your accounting team is set to separate Quickbooks files from each legal entity. If you want to be able to prepare combined financials using the accurate software, you'll need to use QuickBook Enterprise instead of QuickBook Pro or QuickBook Online. It's very important for tax, audit, and company valuation purposes. Each legal entity needs to stand alone, exactly as if it were a totally separate and independent company. Do not fall into the temptation to account for all your legal separate entities as one, regardless of the level of common ownership between them. Accounting and tax rules are very strict as to the relationship between companies under common control. In addition, you will be miles ahead of the competition if you're able to provide complete and accurate financial information for any and all legal entities as to the click of a button by following these tips in the article. Pro tip number 3, Use the same chart of accounts in each QuickBook file. When setting up your first QuickBook file, create a master chart of accounts in a worksheet. Consult with your accountant to properly tailor to fit the needs of your business. Upload the master chart of accounts into each QuickBook file you create. It's fine to have certain accounts that are only applicable to one QuickBook file. The reason for the standard chart of accounts across all QuickBook files will become evident as you consolidate financial reports from your separate QuickBook files. As your business grows, you'll likely need to add accounts to one or more QuickBook files. When you do, add the new accounts to the other QuickBook files with the same account number and description. Pro tip number 4, keep all the details of sales, cost of sales, and inventory in the point of sale system. Utilize the point of sale system for your sales, cost of sales, and inventory subledgers. At the end of each month, and the grand total of your sales, cost of sales, and charge and inventory in the point of sale system to the respective QuickBooks general ledger accounts. There are various ways to accomplish this within QuickBooks, and your accountant can recommend a procedure that works best for you. However, avoid general journal entries and accomplish this using the design QuickBooks functionalities, such as creating sales receipts and transferring costs between cost of sales and inventory, because auditors are required to dig into general ledger entries recording during the time of year and subsequent year end. Limiting the use of your journal entries or general journal entries to actual corrections, it'll save you time and aggravation during an audit. Also, be sure to have a printed and or electronic copy of the month-end sales, cost of sales, and inventory balances outside of the point of sale system. These are important details that support your balances in your general ledger and will be needed at audit and tax time. And with that, we're going to roll this one up. This is Talking Hedge. I'm Josh Kincaid, and I'm out.